Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock, with news the world's largest economy seems to be losing its growth momentum. New orders for American durable goods fell at a sharp rate in October from the previous month, a decline that analysts weren't expecting. Year on year, however, levels are up 8.7%. The monthly decline suggests an economy slowing faster recently than has been assumed. The Atlanta Fed's GDP Now model has the rate of growth pegged back to 2.5% in the fourth quarter and way down from the third quarter's rate of 3.5%. Momentum seems to be leaking away, and quite quickly. Telling the same story of a slowing is the latest consumer sentiment survey. And American home buyers filed the fewest applications for mortgages in almost 18 years last week, even as mortgage rates drifted lower in step with bond yields. And perhaps that is not so surprising because existing home sales are still quite low, down in October 5.1% from the same month a year ago. Wall Street, however, is up today, a bit of a bounce back from yesterday's sharp fall. The S&P 500 is up 1% in early afternoon trade. Whether this is a genuine turn-up will depend a lot on holiday season retail results. That equity rise comes after Shanghai managed to close even yesterday. Closing even is a good result for China, but investment funds are struggling with the previous write-downs in equity valuations. Private funds have had a hard time attracting money this year as China's financial markets wrestle with a bear market in stocks, tough new asset management rules, and a national campaign to reduce debt. These funds are seeing net outflows. In the EU, Brussels has pushed back hard against Italy's plan to ignore its debt level commitments. It notes at 131% of GDP in 2017, the equivalent of €37,000 per capita, Italy's public debt exceeds the 60% of GDP reference value it committed to as part of the EU. And it doesn't want to see Italy go further into the hole it'll never get out of. In Australia, there's a lot of silly posturing going on at the Hayne Royal Commission, some by the Commission itself. But one positive thing may come of it all: removing the inherent conflicts of interest in mortgage broking. It looks increasingly likely that the mortgage brokers will need to charge their clients directly for their services rather than taking commissions from banks. The US Treasury 10-year yield is starting today higher at 3.07%. However, their 210 curve is still lower at 25 basis points. The Aussie government 10-year is at 2.70%, the Chinese government 10-year is at 3.40%, while the New Zealand government 10-year is at 2.74%. Gold is up $4 today to $1,226 an ounce. US oil prices have bounced back today, recovering a good part of yesterday's big drop, but today they're still at only $55 a barrel. The Brent benchmark is now just over $64 a barrel. The Kiwi dollar, however, is starting today marginally firmer at 68.3 US cents. And the cross rates are unchanged at 94.1 Aussie cents and at 60 euro cents. That puts the TWI up to 72.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.